Glad you're here. Welcome to Modern Investing Techniques, Episode 6 for March 26, 2026. I'm Patrick, coming to you from Vancouver. Here's your daily market intelligence and today's practice trade. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Canada hits the NATO 2% GDP defense target, opening fresh capital flow opportunities in Canadian aerospace and defense names. Markets are mixed and cautious today. The S&P 500 closed at 6,545, down 0.7%. The NASDAQ Composite finished at 21,701, down 1.0%. The TSX Composite closed at 32,335, down just 0.1%. Geopolitical uncertainty around Iran is driving oil higher while stocks swing between hope and doubt on potential de-escalation. Canadian investors should watch defense sector strength on the NATO spending news. Keep an eye on how any escalation in the Middle East affects energy and materials exposure in your TFSA or RRSP. While this spending commitment creates long-term tailwinds for defense, today's markets are showing caution amid broader geopolitical uncertainty. Let's talk about a practical strategy that turns this kind of government spending signal into portfolio action. The defense spending catalyst strategy involves identifying companies positioned to benefit from sustained increases in government defense budgets, then taking tactical positions when official spending targets are confirmed. Today's announcement that Canada has officially reached the NATO 2% of GDP defense spending target provides exactly that confirmation signal. That target was originally set back in 2014. Implementation is straightforward on the TSX. Scan for Canadian-controlled aerospace, drone, and defense technology firms. Cross-reference recent contract wins or partnerships. Size positions at 3 to 5% of portfolio with a 6 to 12-month horizon. Use free screeners on Questrade or Wealthsimple to filter for companies with strong cash positions and low debt. The strategy has historically performed best in the 12 to 24 months following major NATO or allied spending pledges. That's when procurement contracts eventually flow through. Risks include political reversals and long sales cycles. Canadian investors can hold these in TFSA or RRSP accounts to shelter any capital gains. Given the increased volatility and headline risk, let's talk about a practical skill every investor needs right now. Imagine you placed a market order for a small-cap defense stock yesterday morning right after the NATO spending headline hit. Your order filled 18 cents higher than the last quoted price. That cost you an extra $270 on a 1,500 share position. What actually happened is that the bid-ask spread on that thinly traded name widened from 4 cents to 22 cents in the first 45 minutes after the news. Market makers pull back liquidity when geopolitical or policy headlines create uncertainty. They widen spreads to protect themselves. On the TSX, this effect is magnified for names with average daily volume under 250,000 shares. The pro tip most retail investors miss is to always check the spread and 20-day average volume before hitting buy. Professionals use limit orders placed between the bid and ask rather than chasing momentum. The biggest mistake is treating all stocks as equally liquid during news events. Instead, always verify real-time depth and set your limit order at or inside the current spread before entering. This discipline of waiting for proper conditions is exactly why we're sitting on the sidelines in today's practice investment. Let's move to the practice investment of the day. This is a simulated trade for educational purposes only. No real money is involved. Trade type is weekly hold. Today's pick is none. We're screening for Monday entry. Market focus is TSX and NASDAQ. Strategy is waiting for confirmed volume and technical alignment on defense or critical minerals names. AI analysis shows multiple defense and mining stories today, but none yet show the combination of volume surge plus positive price action required for a high-confidence weekly hold. We're monitoring names with RSI 14-day between 45 and 65, and price above the 20-day moving average. Looking for volume at least 1.5 times the 20-day average on any NATO-related move. Risk assessment is strict. We'll only enter with a maximum 6% stop loss from entry, avoiding names with wide spreads that could create slippage. Confidence level is low, single-factor catalyst without confirming volume or technical alignment. This demonstrates the discipline of not trading when conditions are incomplete. Many retail investors jump on headlines and suffer whipsaw losses. Learning to wait for multiple aligned factors is one of the highest edge habits you can build. Catalyst plus volume plus technical confirmation. We will revisit the defense sector on Monday with fresh data. Sticking to process is also important when evaluating new technologies that can give retail investors an edge. Geophysical survey techniques like ambient noise tomography are increasingly accessible to retail investors. They appear through company press releases and public data rooms. Global Uranium Corporation just announced plans to run an ANT survey at its Astro project in the Athabasca Basin. When successful, ANT can dramatically de-risk early-stage uranium or copper projects. It identifies subsurface targets before expensive drilling. Savvy investors can track these announcements on the TSX or CSE. Then use free tools such as CDAR Plus or company websites to monitor results. While we watch resource exploration innovation, another interesting development is happening in crypto and real estate. Coinbase's new partnership with Better Home and Finance allows crypto holders to pledge digital assets as collateral for home down payments. For investors with concentrated crypto positions, this creates a potential liquidity bridge. It avoids triggering immediate taxable sales. The tool is still emerging. Interested Canadians should monitor regulatory approval in Canada. Compare margin rates versus traditional HELOCs before using crypto collateral. Let's close today with a few quick hits across the mining, banking, and defense tech sectors. Barrick is extending its review and slowing development of the massive copper-gold Reko Diq project. This is due to escalating security issues in Pakistan and the Middle East. It highlights the need for strict country risk limits in resource portfolios. Bank of Montreal announced a goal of more than 15% ROE by 2028. This is driven by expansion in wealth management and its U.S. operations. Canadian investors can watch whether the bank's wealth segment outperforms broader Canadian banks in coming quarters. Volatus has signed an MOU with Sentinel to develop advanced composite UAV structures. This supports Canadian sovereign drone capability. It adds to the growing Canadian defense tech theme following the NATO spending announcement. Cerro de Pasco Resources gained surface access to the full tailings storage facility in Peru. This unlocks the next phase of project development. Tailings reprocessing stories often provide asymmetric upside for junior miners. Our simulated portfolio currently shows no open weekly hold this week. We are maintaining discipline by waiting for full technical and volume confirmation. This keeps the running win rate protected while we gather better setups. The AI analysis is learning from these low confidence days and adjusting screening thresholds accordingly. Now, here's something that most retail investors get wrong, and it cost me money before I figured it out. You know what separates the pros from the amateurs on fast-moving news? It's understanding exactly how liquidity evaporates when headlines hit. That 18-cent slippage on a 1,500 share position is real money left on the table. Market makers are not your friends during uncertainty. They widen spreads to manage their own risk. Checking the 20-day average volume takes 10 seconds on any trading platform. Placing a limit order inside the spread instead of using a market order is a habit worth building. The misconception is that all TSX stocks trade like the big banks. The fix is simple. Never chase a defense or mining name on headline day without first verifying depth. Before we wrap, briefly watch for fresh volume data on Canadian defense names tomorrow. That's modern investing techniques for today. If you found this useful, share it with a fellow investor and subscribe wherever you listen. Check the resources page for tools and platforms we discussed. We're back tomorrow. Keep learning, keep investing. This podcast is curated by Patrick, but generated using AI voice synthesis of my voice using ElevenLabs. The primary reason to do this is I unfortunately don't have the time to be consistent with generating all the content and wanted to focus on creating consistent and regular episodes for all the themes that I enjoy, and I hope others do as well.